stocks and Bitcoin fall in unison as inflation numbers spook markets. The S&P 500, Dow Jones Industrial Average, and the Nasdaq are now far below where they started the year, declining 17.96%, 12.99%, and 29.26% respectively, before the market opened on May 12. Numerous stocks, both big and small, are struggling to hold their prices. In particular, the tech sector has been decimated. Likewise, Bitcoin, which has long been termed digital gold, invoking its alleged properties to serve as a hedge in turbulent markets, also fell below $28,000 this week from its peak of $69,000 in November of 2021. Currently, Bitcoin is down 63% from its all-time highs. Final proof that nowhere to hide applies. The US bond market has also been struck hard this week with losses. Who or what is to blame? It's difficult to place sole blame for the overall market turmoil on one factor. However, the most recent and most cited culprit seems to be inflation. Inflation readings for April, which were released on May 11, came in higher than expected, which in turn caused more anxiety in the already anxious markets. After the readings came in, stocks sold off on May 11, which seemed to spill over into the crypto space, where the biggest fiasco relating to Luna and the stablecoin tied to the cryptocurrency appeared to rattle the crypto markets. More trouble ahead? Yet the troubles don't seem to end with inflation. The war in Ukraine has rattled commodities, where record high prices were seen for oil, gas, lithium, and other commodities. European Union is looking at ways to ban Russian energy from its continent completely, which might change oil prices in the near term. Finally, to round out the market anxiety, the Federal Reserve has decided to be more aggressive in raising rates and selling off its $9 trillion balance sheet. When the future of markets look bleak, skilled investors take a long-term perspective. Markets meltdown happening in the past but have never been a permanent feature, but more of a temporary glitch. Historically, markets have gone up, and probably all experts would anticipate the same. If investors' risk appetites can handle the volatility, the best option is to stay in the markets rather than trying to time the markets. Even the greatest investors of all time use this adage to good measure, since it seems to produce the best long-term results. Yes, indeed. A similar option is to DCAN. If you have capital available, as the market keeps on dropping, give yourself the opportunity to get in lower and lower. Brexit might prove a blessing in disguise for UK crypto industry. Last month, Her Majesty Treasury announced its intention for the UK to become a global crypto hub in response to similar efforts being made by places like Switzerland and Dubai. And recently, the Economy Secretary to the Treasury, John Glenn, the government's de facto crypto Caesar, has been meeting with executives and policymakers in San Francisco, Washington, Brussels, Madrid, and Luxembourg. Glenn is next expected to visit the crypto valley of Zug in Switzerland, a country whose regulatory independence from the EU has enabled it to enact these crypto-friendly policies. Whatever you thought about Brexit, we're now seizing the opportunity that comes from it. Glenn said recently, this regulatory freedom is critical. Brexit opportunity. Despite initially hampering efforts, these executives now believe that the independence afforded by Brexit may actually have contributed to the country's current efforts. There's real opportunity for the first time post-Brexit in particular for crypto to have legislation that will enable all of its key ambitions. Blair Halliday, the UK head of cryptocurrency exchange Gemini, told Bloomberg. Amid the regulatory overload created by the UK's exit from the European Union in 2016, a framework for digital asset became a low priority. However, once regulators began taking notice, they sought to regulate cryptocurrencies similar to traditional finance services, threatening to strive innovation and sending fledgling crypto companies abroad. A lot of these companies are quite global and they can relocate to wherever is the most preferable location, said Diana Biggs, Chief Strategy Officer at Crypto ETP provided DeFi technology. FCA about face. Yet, as the EU introduces tougher regulations governing crypto transfers, Brexit has now afforded Britain an opportunity that officials have recently moved to seize on. Earlier this year, the UK Financial Conduct Authority said it would impose tougher rules on crypto marketing, while the temporary registration regime for digital asset firms resulted in over 80% of applicants either withdrawing their bids or being rejected. Now the FSC is looking to establish clearer rules for crypto assets as well as regulations for issuers of stablecoins. Earlier this week, the FCA held a two-day event during which officials saw feedback from executives, academics, and stakeholders on how to better regulate the industry. Jaminis Halliday acknowledged that the country is a better place than ever to reverse the trend. They're at the point where they're not stymied or held back by having to consider these transitional agreements and arrangements, he said. The foundation is there. Now they're able to assess what the landscape is in financial services and really push on. The opportunity is endless. It's just which country is going to take it first. But before we continue, make sure to look at Wolf Financials, a decentralized exchange, yield farming, and staking. They're having their pre launch the 11th of August. All the information will be down in the description. Wolf Financials revolutionizing the world of decentralized finance with Wolfswap. Now more news. This is probably the biggest news of the day. Chinese High Court rules Bitcoin has economic value and is legally protected. China's controversial cryptocurrency landscape has taken a new twist after the Shanghai High Court's People Court ruled that Bitcoin has a certain economic value and is virtual asset protected by the country's laws. In a notice posted by the court on messaging platform WeChat, Bitcoin has some economic value and harbors the relevant property attributes. Bitcoin.com reports. The ruling is monumental considering that China has banned cryptocurrencies like Bitcoin, citing a threat to the country's financial sector stability. In actual trial practice, the People's Court has informed a unified opinion on the legal position of Bitcoin and identified it as a virtual property. Bitcoin has a certain economic value and according to the attributes of property. The rule of law of property rights is applied for protection, the ruling reads. The court's decision is the first ruling on Bitcoin by the country's legal system. Notably, China's High People's Court ranks as the highest local court within provinces. However, it is not unclear if other higher courts can adopt a similar stand on Bitcoin. Well, if it's not a similar stand, it's a beginning to good news for cryptocurrency in China. Impact of ruling. Commenting on the ruling, Liu Yang, a Benedict lawyer, said the directive by the court would act as a significant point of reference for Bitcoin-related civil disputes within the Shanghai area. Considering the case ruling declaring Bitcoin should get legal protection, keen interest will be on how crypto players and the government responds to the directive. The ruling emanates from October 2020's case where an individual identified as Cheng Mao filed a case with the Shanghai District People's Court demanding that one Shi Momo returns his one Bitcoin. However, the defendant failed to return the Bitcoin as directed by the court in February 2021, ruling within the stipulated 10 days. Cheng resolved to seek a redress from the Shanghai local court system, where the Bosom Court organized intermediates between the two parties. China, perennial crypto opposition. Although China has a long standing opposition against cryptocurrencies, last year's directive to outlaw cryptocurrency trading and mining was considered significant after the impact on the general market. The directive resulted in a massive crypto market correction, with miners shifting to friendly jurisdictions. Notably, at the time, China accounted for the highest number of Bitcoin miners globally. The government has maintained the cryptocurrencies disrupt economic order and can prevent the transition of individual risk to the broader society. Since then, the government has been releasing crypto regulations in order to seal any loopholes. One of the recent regulations banned crypto related short videos shared online. As reported by Finbond, the China Netcasting Service Association updated its regulations outlawing sharing videos promoting digital assets. Different laws, different things happening in China. But there's a beginning. They started to look more towards cryptocurrency than back away from it. And our final bit of news is Germany affirms crypto sold after 1 year is tax free. Germany's crypto ecosystem has finally received nationwide tax guidance, with one EU policy expert labeling it a huge success. Crypto investors in Germany won't pay tax on sales of digital assets such as Bitcoin and Ether as long as they held for more than 1 year. Germany's Federal Ministry of Finance shared the ruling in a 24-page document, which formally defined blockchain concepts such as mining, staking, airdrops, and masternodes within the context of the country's system. The decree marked the first time Germany has issued nationwide tax guidance on cryptocurrencies. It was crafted in close consultation with the country's 16 federal states and well as top financial institutions. Government ministers had held a hearing last summer to gauge sentiment along local crypto associations such as Bitkom and other market participants, including individual investors. One of the most pressing questions related to whether lending or staking cryptocurrencies extends the tax free period on digital asset sales to 10 years, as in the case with buy to let properties. The deadline is not extended to 10 years if, for example, Bitcoin was previously used for lending or the taxpayer provided Ether as a stake for someone else to create their block. State security 𝙏𝙝𝙖𝙣𝙠 said in a statement. EU policy expert Patrick Hansen, who advised President Capital on crypto ventures, told Blockworks that dropping the 10-year rule was by far the most important demand of the German crypto community. This is already a huge success and makes Germany a very attractive country, crypto tax wise, Hansen said. The ministry letter also gave some clarity with regard to airdrops, a popular method of distributing crypto tokens as a mean of attracting users and liquidity. Earlier this year, Yuga Labs airdropped ApeCoin to Bored Ape NFT holders for use within the upcoming bike gaming ecosystem, for example. Germany finance minister outlined institutions in which airdrop recipients would have to pay income tax, such as exchanging access to the airdrop for personal data or social media posts. But if no action is taken by the recipient, there won't be any income tax, although airdrops can still be taxed like other gifts, explained Hansen. People normally have to pay taxes on airdrops, but there will be a lot of exemptions, he said. Hansen expressed the other very important provision outlines rules for paying staff in crypto. The ministry ruled that crypto tokens which have no market value because they are not listed on any exchange won't be attributed to the taxpayer. This means tokens paid to employees won't be taxed until they become tradable. All this is good news, according to Hansen, but the letter leaves something to be desired, he notes. Namely, the ministry still views staking digital assets via full nodes as a commercial activity, which has big tax implications for gains made by full node operation compared to third party staking providers. This set the wrong incentives, in my opinion, Hansen said. In any case, he considers Germany definitely ahead of the most other countries in the world in terms of crypto regulation, taxes, anti laundering rules, particularly in travel rule implementation and the crypto business licensing. Well, if we look at the current news just came out, Brexit, looking at crypto, the Chinese moving more towards crypto, and Germany implementing their tax regulations, the adoption is bigger than our minds. Leave me your thoughts and concerns down below. And remember, smash that like and subscribe button. Have a great one.